Wednesday, November 15th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'm going to look at the dollar index today, looking very interesting technically, and also at the markets. Billy is still asleep, still early for him. He's getting on, he's 9 years old, so sometimes he's here, sometimes he's not. So, what are the markets doing this morning? Well, the stock markets are starting to look more interesting in that they're actually dropping a little bit, quite a bit. I know they've rallied in the last couple of days off bigger drops, and they finished, not that far down. But yeah, we're starting to see more drops. So what do we got today? Spot gold, $12.8250, up $2.30. Range has been $12.77 to $12.84. So gold firming back up, still stuck here. Silver $17.06, up 4. Range has been $17 to $17.10. So holding that 17 level, but nothing to write home about with precious metals at the moment. The Dow futures down 72. So as I said, getting interesting. 23,335. The low has been 23,327. So pretty much near the lows. The S&P is down 10 points at 2568, right on the lows. The high's been 2579. So stock market's down about 1/3%. The NASDAQ future is down 0.5% or 29 points at 6260, right near the lows as well. Currency-wise, sterling is 131.70, up 6 pips. Euro above 118 now, 118.10, up 12. And the dollar is substantially weaker against the yen. Just testing here, 113 to figure. It's 113 to figure, down 45 or down 0.4%. The low's been 112.90. So dollar index is looking very interesting. I made a video almost 3 weeks ago, and I'll put it up on the cards above and on in the description below. And I said dollar index, long-term bottom or short-term consolidation. And at the time I was saying, we could go on for a few more weeks rising in the dollar index. And I said gold would stay under pressure, gold and silver, and that's what's happened. But I said as well, is this is this a long-term bottom or is it a consolidation? It looks like it's a consolidation. Going forward now to today and looking at the charts, it very much so looks like one. So let's look at the shorter term chart here in the dollar index. I've drawn here head and shoulder, inverse head and shoulder, which I spoke about on the 25th of October, that it looked like we're breaking out of an inverse head and shoulders, and the target could be as far up as 97. And but look at where we've gone. We haven't even gone to 96, and it looks like it's turning around and breaking below that neckline, which is really important. So it looks like the head and shoulder formation, we weren't even able to go to the objective. As of now, this could be it could rebound back above the neckline, but it doesn't look like it. It looks like it's completely failed, that inverse head and shoulder neckline. So let's have a look at more longer term chart. Because I spoke as well about a bear pennant that was forming, and I used a weekly chart. Right now, this is a daily chart, and I'll bring the weekly chart in a minute. But as you can see, I was speaking as well about this bear pennant that was forming, and usually that is a consolidation in a longer term trend. And as you can see, since the beginning of the year, the trend has been down in the dollar index, and it looks like we're breaking now the support here in this bear pennant formation. So that's looking, you know, like the dollar is going to continue to go lower for the rest of the year, or, you know, the next few weeks or so. So the weekly chart here, nothing really too different, but that's a chart I used on the 25th. As you can see here, yeah, clearly breaking that, you know, the trend line on the bear pennant. Where's the objective gonna be? Well, you know, I saw the maestro the other day. He was talking about 88 in the dollar index. That's possible in the next few weeks. But even longer term, we could see, you know, because we went from 103 to 91, you know, that's about 12 big figures. So if you go 91, 81, you know, we could go to 80 or below 80 sometime next year. And, you know, I don't know when, maybe in the next 6 months. But the long-term picture for the dollar, not looking very good. And it looks like we've got our answer from the 25th of October. It wasn't a long-term bottom, but it was a consolidation of a bearish longer-term trend, it looks to me, in the dollar index. So what are the levels now we need to look at? Well, I would say, you know, 92.50 looks like a, you know, a level to keep an eye on. And of course, the 91 level there, which was the low this year, just below 91, I think 91 or something like that. So what else is there to, you know, what else is happening? Well, I just want to say to maybe Europeans or British people listening to this video, or people in Australia, New Zealand, people who don't use the dollar or don't have the dollar as their currency. By me saying that, I think the dollar is going to go lower. Yeah, of course, it's going to go lower against the yen, the euro, the sterling, some of the Scandinavian currencies, the Swiss franc. But does that mean that holding your currencies is the best thing to do? No. Personally, I think the best currency will be still gold and silver, physical gold and silver, even in the other fiat currencies, because the other fiat currencies are based on the US dollar. And one article I saw yesterday, and it's from, it was on Zero Hedge, and it was one of the, I forgot the name now, one of the gold sites, Gold Core, I think. They were talking, they found out that the ECB now is thinking of scrapping, you know, the deposit insurance for European depositors. Right now, I think it's up to 100,000 euros. So they came out with a paper a week or so ago, I think 50-page paper, really boring, you know, of talking about reforming the system for financial stability. And one of the things they say is that they're thinking of actually scrapping that deposit insurance for depositors holding up to 100,000 euros. So that's even another another reason for Europeans to hold physical gold and silver, to be out of this, you know, banking system as much as possible. They even have one part of the paper. They say that if there's an emergency and the system shuts down, the banking system shuts down, they will keep people, you know, depositors in touch, and they will let them know within 5 days how much money they can have, and that they'll have enough money for their cost of living. Can you imagine that? You have your money in the bank, you know, thousands of euros, and then they shut the bank down and say, oh, you have to wait. We'll tell you in about 5 days. Oh, yeah, you can have 200 euros for the next 3 weeks. You know, that's the kind of thing that's happening. So not only physical gold and silver, but maybe have some physical cash, euro banknotes. I don't think this applies to the UK, not because we voted Brexit, but because our deposit insurance rules are drawn up here, because because we have a different currency, and it's to do more with the Bank of England, and I haven't seen any change in that. I think it's 75,000 sterling right now. It used to be 85, but maybe we will see something come out of the Bank of England. We need to keep an eye on it too. So that's it for this morning so far. Well, as I leave here, 10 minutes past 8, gold is now making a new high at 1284.50. So looking interesting. It looks to me that the consolidation correction in the longer term bear market in the dollar is over, and they we'll have to keep an eye on it. You know, that's how markets work. You need to keep an eye on the indicators. So if you enjoyed this video, please like, share it far and wide, subscribe to my channel if you haven't yet, and you can also follow me on Twitter and on steemit.com. And I'll talk to you later. Bye.